Good afternoon, everyone, and welcome to the weekly technical video day. Guys, in this video, what we're gonna try to show to you guys is the weekly overview. In other words, what we believe that the long-term charge and heading out. I want to be clear with it in the idea that, as you guys know, for the last 2 weeks, more or less, I've been short dollar bias. Now, the most data we got, the more data that we can get to the conclusion that technically we were right at the moment. Now, let's start with the euro dollar on the daily basis. A clear triangle here, which looking right here on the D wave, when we got A, B, C, D, there is two alternative counts within the D wave. When this is A, B, C, or this is a flat. And this one, I was counting the inside, and it's still showing to you guys as a corrective move, but it looks like we have an extra wave there. Now, Elliott Wave Y edging, do not matter what it is, I believe that the dollar is gonna get a corrective bounce pretty soon, either for current levels or a little bit higher, and that bounce needs to be bought pretty hard against the 41 area. Eventually the bounce should end around 42.70 area, 43.20, before it goes higher, but there is no doubt in my mind at all that the euro is heading to around 153 area. Now, that should be a good trade that we're gonna take when the scenarios present to us. That's about the euro, guys, on the dailies. Also, let me show you the S&P. The S&P, it looks like it's ending also wave D around the 76% retracement. This being brutal right here. I mean brutal. It looks like a wave 3, but well, wave C or also our wave 3. So technically speaking, we're still favoring, due to the nature of this recovery, which it looks like a 3-wave, we're still favoring the scenario with a triangle. If you overlay the euro against the S&P, it's pretty nice to see how they've been trapped. The euro's been trapped in the triangle, and that's gonna create that bounce on the dollar is gonna create that the S&P rebounds. I don't think to the trend lines, but around this support area before going higher in the final thrust to around 1425 area. Now, around the market also we see scenarios. Let me show you the cat. I know that I got some good clients that they love the cat. This is what we see in the cat. This was wave 4, and it's ending a 5-wave move before going lower. We're planning to short the dollar against the cat. I got that many good sellouts, guys, and starting tomorrow we're gonna launch a new trading system that is being developed when we're gonna have a lot of trades. Look, this is the cat on the daily. You can see 1, 2, 3, 4, 5 here, a 2, and then when you play it with the Fibo, you're gonna see that the low right here was the 1618 right here, and then the reverse, and we've been right in these guys. It was by the dot, the 3802. So any retracement in the cat should be bought against 9913, and we're planning to do that. That's the cat on the daily. The pound on the daily, let me show you the pound on the daily. The pound on the daily, I'm labeling like this, A, B, C, A, and I'm expecting also the pounds to go higher to around 165 against allowing the euro to go higher to 53 and the dollar to go below 72 at the S&P to 1425. I mean, that's more or less what we see in overall in the market. Short term now. Now let me show you the euro pound. I know that I got some clients also that they like the euro pound. Let me see where the euro pound is. I see the euro pound going higher yet with more outside. It going to 91.63 before going lower. Even 92, you can reach 92. I mentioned the equal less here, but if you're gonna go with this equal less, it has potential to go even to 93, the euro pound. Now, short term, the euro pound, what I like is this: a 1, a 2, a 1, 2, 1, 2. We should be ending wave 2, wave 3 with the next high. I know that we have divergence, but that divergence, I believe, is gonna be erased. On the euro, this is what I like. I still believe that the scenario is the triangle is ending right here, the D way. But if it's gonna become like this, 1, 2, 1, 2, and then I like it in the dollar index, but I don't like it in the euro because they're overlapping in this section right here. In the dollar, we didn't get the overlapping, and I'm labeling as a flat. But in the euro, I would go with the double zigzag, which we are in the area of the equal legs. But I believe that any short in the euro with a stop on 146 should be 147 should be fine. Now, the euro yen is a one pair that is telling me that the bounce in favor of the dollar is coming in the euro dollar. Look, this is a perfect 5-way, guys. Perfect. 1, 2, 1, 2, 1, 2, 3, 4, 5. Look at the structure right here, and the Elliott Wave system that we developed is telling me that this is gonna drop pretty hard pretty soon. Look the divergence that we have right here. So I'm assuming that a weakness in the euro is coming in some degrees. Now let's take a look at the oil and the dollar trade. Okay, guys, this is the dollar index. It looks like it's a triangle, even though it still is a chance, but it can go a little bit higher to 77. But it looks like, seeing the euro, seeing the S&P, I would go with the triangle at this stage. ABC, and then a flat right here. I would go with a flat on the E way when we should be pretty close right here. I've been mentioned the 7410 area is the trend line in the 4 hours right here, and also is the 76.4 of the C way. So I'm expecting for the beginning of the week, I'm expecting for the beginning of the week a bounce in the dollar, and then the dollar is gonna be soared back middle of the week. Remember, there is the ECB rate decision this week, and remember, after this new low in the dollar, you should not get too excited because it's trusting for the triangle. So the scenario that we've been waiting, which is Armageddon, is gonna happen. I've been saying, guys, put it in writing. I've been saying the last week of August, first week of September should be when the war is gonna come to some type of distress in the financial market. That's what the FIBO time's telling me, and that's what I really believe. So let me show you also this. Let me show you this decline here in a 1 hour in the US. Okay, This is the one. This is the decline, the proposed C of the triangle, and the reason that I'm putting it like this is because I got divergency, and then I don't do a label so you guys can see when I'm coming from. I can see 1, 2, 3, 4, 5 right here, 6, 7 possible A, but this is 7 right here, and A that was corrective. So we need another low in the US dollar here, and that is the one that is gonna end about 74.10 before the US dollar is gonna go higher. Now, how are you laboring? 1, 2, 1, 2, a 3, a 4, and a 5, and then a 4 and a decline. That's how you're laboring. This wave, 1, 2, a 3, a 4, and a 5. This way clear, and then this way 1, 2, 3, 4, and a 5. All right, guys. So that's what we believe is taking place with the dollar. The dollar is gonna get strong between Monday and Tuesday, and most likely Sunday night, because of the holiday in the USA on Monday. What I believe is gonna go in favor of the risk trade. Tuesday is gonna bring the dollar higher, and then by Thursday when the ACV take place, and I believe they're gonna, I think that the rate in the ACV, the high rate in the ACV, is gonna create like a trust for the triangle in the dollar and the euro, and then after that people are gonna realize that there is no more quantity easy, and then this thing is gonna, oh my gosh, unbelievable what's gonna take place. Now let me show you the oil and the 4-hour chart. Oh, you guys know that is two types of seeing it. You can either label this as a triangle, and then you got 1, 2, 3, 4, 5. This is the end and goes higher. I'm labeling here as a wave 4, but I'm gonna remove it after you because I don't think that that's the scenario no more. Too deep, and it break the trend line. So technically what I see is this right here, like this, and then this is instead, this is A, and this is a bullish oil that is gonna take oil to 127 area, and then check on the side, check on the chart of oil, but then oil from here you got ABC. This is a wave on, if I'm not mistaken, out of my mind, on the dailies and the weekly chart. This is a B wave when wave C is about to take place. Wave C is, this is a wave B. Let me put it here correctly. This is a wave B, and then also this is a three-way on the daily chart. On the weekly, this is the 50% retracement in oil, and then oil is gonna have a marginal high on Monday, and then it's gonna retrace, and oil gonna go to or it's gonna go to new highs. Let me see if I have in this computer the weekly charts on oil. I don't think I have it here. Yeah, oil weekly. So technically this is how it looks like on the weekly on oil. This is not a correct count. I put it, it's on the other computer on the side, and then technically this is right here. This is W. This right here, this is S, and then this is B right here. When you complete, sorry my bad, you complete 5 waves, this is A, and then from here you see the 50% retracement by the dark, oil should, depends on which gold market wanna go, oil should go to either 140.20, 121 is too small, or you go from this, it goes to 129. But I see oil between 129 140 in the next 3 or 4 months. All right, guys. Or by August the 30th, because let me show you something. The video is too long already. If you're gonna mention with the time, these two legs needs to be equal. This one took 51 week to be completed, and then this one already go 47.50 ended right there, but it did a three-way. So I will go to this should be this should be the day that it comes. This chart do not give me that, but this day right here is the one that it should present that this wave or an extension around here when oil should end. That should come around, I would say, September or the last week of August. So we got 260 days to get that wave right there. Okay, guys. So again, I see the yen should get strong at the beginning of the week or during the week. I see dollar selling. I see dollar strong at the beginning, selling after Wednesday, and then see oil higher. S&P, if it's a triangle, it still need a correction, and then going higher. So risk on, guys. That's what it's gonna be. Probably 48 hours or risk off, and then risk on for the next, I don't know, 3 or 4 weeks. All right, guys. Leave it there. I'll get back to you guys tomorrow. Remember, we're gonna start doing and providing a lot of trading starting this week. Thank you, guys.